Welcome back to Good Morning Nigeria. If you just joined us, we are about to start our conversation on banks recapitalization. What does it all mean, both for banks, for the economy, for you, and for everyone in Nigeria? Let's take a background report by our correspondent.
Bank recapitalization simply means a bank increasing its capital base by raising extra funds. The aim is to make banks stronger, more stable, and better able to withstand economic shocks, reduce the risk of collapse, and support overall economic growth. In Nigeria, this recapitalization drive is led by the Central Bank of Nigeria. It requires banks to boost their minimum share capital so they can better absorb losses and contribute to the country's goal of achieving a $1 trillion economy by 2030. As part of a strategic move to reinforce the stability of Nigeria's financial system, the CBN rolled out a robust bank recapitalization program. Under the 2024 policy, the minimum capital requirement is set at 200 billion naira for nationally licensed banks and 500 billion naira for the internationally licensed banks. Banks can meet these targets through rights issues, mergers and acquisitions, or by voluntarily moving down to a licensed category with a lower capital threshold. The goal is to create bigger, more stable institutions capable of providing larger credit facilities. Now, how exactly does this strengthen the country's financial institutions? Our guests in the studio will be breaking it down for us shortly.
All right, many thanks to EME for the background report. Let's now bring in our guests who are already seated and ready for the conversation. It's an honor to introduce Professor Uche Waleke, President, Association of Capital Markets Academics, right here with us. Many thanks for joining us, Prof.
Thank you, Irene. Good morning, Nigeria.
All right, you're welcome. And also here is Professor Mike Obadan, Professor of Economics and former DG, National Center for Economic Management and Administration, Ibadan, and former member, Monetary Policy Committee and Board, CBN. It's an honor to have you, Prof.
Thank you very much, Henry. It's my great pleasure to be with you. Good morning, Nigeria.
All right, let's go over to Kaduna studio. Professor Yushao Ango is the Deputy Vice Chancellor, Academics, Kaduna State University, and Professor of Finance and Entrepreneurship. And he joins us in our Kaduna studio. Professor Ango, we're glad to have you with us.
Good morning, Nigerians.
Umudike Umuahia, that's Abia State, Professor Sebastian Uremado, Professor of Banking and Finance, Michael Okpara, University of Agriculture. Professor Uremado, thank you for joining us this morning.
I'm very glad to join the discussions, and I would like to greet or salute my fellow professor, Professor Michael Bada, our father in the system, and Professor Ango, and then my friend Owaleke. Thank you.
All right, thank you.
It's an association of profs.
Yes, that's a robust appreciation. Thank you, Professor Uremadu. Okay, let's start with the breaking downs. I did promise, the viewer. And by the way, don't forget to also send us your comments. As we go on with our conversation, we will display the number that you can send your comments on the screen for you. Let me start with Professor Mike Obadan. And maybe, Prof, please just break it down for us, because whenever we hear this recapitalization, our minds go back to the early 2000s. We all know what happened at that time. And, people are like, is my money safe in the bank? Please, yeah. Can you break it down for us? What does it really mean?
Well, thank you very, very much, Claire. Recapitalization is a regulatory policy action of the monetary authority, that is the Central Bank of Nigeria, aimed at addressing systemic financial issues in the banking system to bring about, stability, resilience in the financial system. When the banking system, when there are symptoms or signs that the banking system is threatened by systemic issues, weaknesses on the parts of the banks, commercial banks, merchant banks, microfinance banks, and others, then the monetary authority steps in through a recapitalization program so that the banks will have adequate or enough capital base to support their businesses. Adequate capital, by banks is very critical to inspire confidence, public confidence in the system. Because when you have banks that are well capitalized, they have adequate money behind them, they are able to withstand economic shocks. And economic shocks can arise from different sources. And they are able to absorb any losses that might arise, during their operations. And they are also able to contribute to the growth and development of the economy by providing credit, as and when required by various stakeholders, particularly, micro, small, medium enterprises, and also the large companies to support their investment programs, support the economic growth, programs that they have. And so recapitalization becomes necessary when the monetary authority senses that there are weaknesses in the banking system that may threaten the stability of the banking system.
Can you highlight for us some of those threats that probably would have triggered, this monetary policy action?
No, the threats, are very, very straightforward. A situation whereby, banks exhibit illiquidity. That is to say, their ability to meet customers' demand for cash, for example, as and when due, becomes weak. In other words, banks are not able, because they don't have adequate capital backing them, to meet customers' demand, as and when necessary. And some banks, because of perhaps governance failures, and then poor risk management practices, may find themselves in a situation whereby they become insolvent. They cannot even, meet their debt obligations, and then the central bank itself has certain, indicators which it uses to judge whether a bank, has capital problems or not. One of which is capital adequacy. It measures this from time to time. The norm today is that commercial banks, should have their different categories of banks. First category, 15% capital adequacy. The second level, 10%. But where you now find a commercial bank having capital adequacy ratio of less than 10%, 4%, 3%, then that bank is in trouble. And the regulatory authority must step in to save investors, to save customers, consumers, and so on.
Okay.
So these are, simple signs that you can use to know that a bank is experiencing, challenges. Then the debt, how much debt is the bank accumulating? Is the bank or are the banks accumulating so much debts in their books that tend to overwhelm them? They are not reporting profits. They are not reporting dividends. These are signs that, the banks may be in trouble because the capital base has been eroded, whittled. So the central bank steps in with a recapitalization program, which is one of the strategies that it can use to try to address such challenges, to say, have enough capital.
Well, Prof, you just talked about capital base of a bank being eroded. The question is, why would that happen to a bank? Because, I mean, they do business. They give loans, get interest and all of that.
Yes.
Why would the capital base of a bank become...
erode?
Yes, exactly.
No, the capital base can erode if the bank, does not manage its risk very well. It takes on too much loans. It's giving out so much loans, some of which the bank may know that are not repayable. Like in the past, in the 1990s, there were serious breaches of corporate governance of the banks. What the banks were not supposed to do, they were doing them. Insider lending, board members, management were lending money to themselves, which they knew they were not going to repay. And they were also lending to their friends and cronies. And, they knew that those loans will not be repaid. And so the banks definitely would have its capital base whittled down, completely eroded. So corporate governance failures is a major threat to the survival of banks.
All right, many thanks, Prof. I think I'll let you, pause a bit and get to Professor Waleke. Recapitalization has been beautifully explained by Professor Obadan, so we know what is happening. And of course, in March 2024, the CBN actually came up with this recapitalization policy, asking banks to increase their threshold capital base, and the deadline is April 1, 2026. Tell us, where are we now? We're very close.
Yes, where are we now? I think maybe when you say Yemi Cardoso, I think he's in the best position to answer that.
Okay.
Yes, but interestingly, I think he has been providing progress reports. I'm talking about the central bank governor. Judging, from what we have read, as at the last count, 8 banks, had met the recapitalization deadline, according to the central bank. But again, it's also important to note that the central bank did not name the banks, okay, for obvious reasons. They just said a number of banks. So all that we now hear about the number of banks, we hear maybe the number has also improved since the 8 banks was as of July, of this year.
We hear they are up to 11 now.
Yes. But again, all of that in the realm of speculation with respect to the specific banks that are involved. But what we know is that progress is being made. It's very important that the central bank keeps the specific banks under wraps, not disclose them, because I've had people say, why is the central bank not mentioning the banks that have met the capital base?
Before you even delve into this question that Ian Ray has asked you, Professor Mike, mentioned threats, layers of threats that could trigger recapitalization exercise. He talked about liquidity, talked about governance issues, capital adequacy ratio.
Absolutely.
Do we have this present at the moment? Can you speak to this? What's the state of the banks in respect to these, threats?
Okay, thank you. broadly speaking, financial system indicators. He mentioned capital adequacy ratio. Simply put, capital adequacy ratio is the ratio of the bank's capital to the what we call the risk-weighted assets or loans. Okay, and he has also told you the the 15% for large banks, particularly the ones that are regarded as systemically important.
Yeah, let's look at the banks. Let's evaluate bank standing on this one now.
Yes.
So far,
I'm getting Okay, to answer your question pointedly, okay, the financial sector indicators, or financial system indicators, banking system indicators, according to the Central Bank of Nigeria, are strong. Okay, the banks, in terms of the requirements, the capital adequacy ratio, banks generally are adequately, that have met that CRS.
So they are above 4%.
No, they are above the threshold between 10 and 15%. Now there's another one, the non-performing loans. Non-performing loans ratio, Central Bank says for a bank it should not be more than 5%. And according to the Central Bank, most banks do have non-performing loans ratio that are below 5%. There's another one that is called the liquidity ratio. The threshold is 30%. And most banks, again, according to the Central Bank, they are above 30%. So our banks, the banking system is stable. Our banks are stable. Now, what is triggering recapitalization in Nigeria, okay, is different from what we find. It's different from what happened to the situation of 2004, and it's also different from what we now find even happening around us, now. A number of countries are also undergoing recapitalization. Sri Lanka is one, Pakistan is one, Ghana is another. Now, let me even take the case of Ghana. Ghana is currently implementing recapitalization, banking sector recapitalization, from December 2023 to December 2025. Okay, so Ghana started before us. Why did Ghana start? Ghana began it because of crisis. So Ghana's own was crisis driven. Our own in Nigeria is policy driven. Simply get your banks bigger, let them be in a position to also support the economy stronger. Not that it was triggered by crisis. Now in the case of Ghana, let me give you the little story around the Ghana capitalization. Between December 2002 to February 2003, okay, the government of Ghana implemented what they call domestic debt exchange. The government of Ghana had borrowed so much from banks, short-term debts from banks with very high interest rates. So banks, because the interest rates were high, banks were making money. So
Prof,
all of a sudden...
Prof, please hold your thoughts.
Yes.
Hold your thoughts. I hear there's a little, slight correction we want to make to your microphone. But we'll come back to you. Yes. Let's bring Professor Uremadu into our conversation. Prof, you've listened to Professor Uche and Professor Obadan speak to us. Is Prof with us? Is Professor Uremadu with us?
Very much with you, ma.
We are in declare. This recapitalization is not triggered by any crisis. We are told that the Nigerian banks are in declare in terms of liquidity, in terms of capital adequacy ratio, in terms of non-performing, debts or loans and all that. But this is governance-driven, policy-driven. So let me ask you, in terms of financial flexibility to meeting the recapitalization target, do you think our banks have that flexibility to do that?
Sure. Very sure. I'm happy that it is government-driven reforms and not systematic risk reforms. The essence one, recall that our financial system is aiming. There has been a rebased economy. That's the right word, rebased economy. And that put us very high. And secondly, there is what President Trump triggered, the tariff warfare, trade warfare. And because of that, the economies of nations are adjusting. So on the part of the current government of President Tinubu, targeting increased growth, he has to checkmate all these risks triggered by from America in order to enable us reach our destination in economic growth and development. I watched on NTA and some other TV some of the new things that are coming to play. Some of the policies, very good GMN policies of government that are coming to play. I saw where Dangote Senior Truck something is happening, motor manufacturing. And there's also agriculture is being driven seriously. Agriculture is being driven seriously. There is also policy a new policy, a reviewed policy on our education, the curriculum of the Nigerians. So all these put together. And as well, we are also beckoning the diaspora to come home and help us through FDI. And we notice seriously the visit to Brazil that has opened so many doors for us and several economic drives of this administration. It shows that this administration has a destination they are targeting to increase the growth of Nigerian economy and stabilize. To stabilize the economy and the financial system not to have any problem, there is a need for recapitalization to boost our asset capital base and then set up things that will not threaten liquidity and as well increase the returns of the commercial banks of and other banks. The other banks, banks of agriculture, banks of industry, all these are put in place, and there is a serious drive again to small-scale enterprises. In short, so many things are going on at the same time. Recall the digital economy, AI and all the rest. So all these need.
Professor Remadu, thank you. Let's just put you on hold and bring in Professor Ango. Professor Ango, I asked a question. Given that we're in decline in terms of what is triggering this recapitalization, I mean, Yeri and I, breathe a sigh of relief that there are no threats. Okay, I hear his Professor Ango is no longer there. So, Professor Yusuf Ango, my question is to you, sir, if you are with us. Yes, what are the options available to the banks now? That's what I meant by financial flexibility. Some were already, Yeri was already talking about merger earlier on. And some, of course, are issuing rights and all that, selling shares and all that. What is the degree of financial flexibility that our banks have to, meet this target?
They have a lot of flexibility. Even the central bank itself, in bringing out this policy, they gave them options. One of the options, of course, is for them to go to the market, raise fresh funds. Another option, of course, is to also raise issues, through right issues. Those are possibilities and that they can do. Now, another alternative which is given to them, like has been stated earlier, is for a bank to reclassify. If you are a Tier 1 bank, you will become a Tier 2 by choice. Or you can merge with another bank. And all of these are playing out, obviously, in the market. We hear possibilities of consolidations, in terms of merger between some perhaps medium-sized banks, just to meet up with this requirement. Of course, some have raised money through right issues. So these are the options that are available. And, you know, quite unlike what happened in 2004 with the Soludo 20-25 billion requirement, I sincerely see a lot of possibilities here. I mean, these are banks that are declaring huge profits. And so it shouldn't be a difficult thing for them to raise additional capital if they want to do so, you know. There are many considerations, and the various banks are looking at it. And the central bank, of course, has already asked the banks to bring their plans, you know, to them, to the central bank, you know, so as to be sure. You know, the central bank don't want to wait the next 6 months before deciding or knowing fully what are the recapitalization plans of each bank. So these are possibilities, and I think the banks are actually working on it.
I would like to get back to Professor Obadan now. I mean, quite a number of views as regards, you know, this recapitalization. And, you know, from reports, some banks have met, like Professor Waleke said, but a lot of people, you know, are speculating that those banks that have met the requirements are probably tier 1 banks. There's actually a report that talks about
They can do what?
There's actually a report that, you know, talking about the banks that have met, you know, the target.
Yeah.
There are speculations they are mostly tier 1 banks, and there's
Yes.
a report at the moment about tier 2 banks being under pressure. What kind of pressure do you think tier 2 banks are currently, you know, are going through, and how do you think they can deal with it just so that they can meet up with the deadline for 2026?
Well, thank you very much, Henry. I think Professor Ango has already outlined the general options available to the banks. Yes, they can go to the capital market, you know, but you know, banks are of various degrees and types. Even though generally the banks, you know, might appear to be strong, but there are still a few of them that are relatively weak. You know, as at the time I was connected to the bank, there were still about 3 or 4 banks that were really, you know, in a kind of distress situation. And the central bank was, you know, pushing them to implement various strategies, you know, even suggesting issue of mergers and all that. And so, yes, they can go to the capital market, but it's not every bank that has that capacity to raise funds, you know, through the capital market, you know, rights issues or general public offer and so on. And so what they are likely to do relate to the other 2 options: mergers, acquisitions. Acquisitions definitely will come where you have relatively very weak banks. They don't have good negotiating power. You are talking about mergers between 2 banks. You know, they probably have relatively, you know, about the same size of strength. And so they can negotiate and get good deals or good bargains. But some are relatively small and are relatively weak, so they may eventually have to be acquired by the larger banks, as had happened in the past. You know, banks are also sensitive to this issue of mergers and acquisitions. And so that's maybe the reason why some of them have been dragging feet, even though they are talking, they are negotiating and so on. They are quite, you know, ego conscious, because when a bank is acquired, you know, by a larger bank, probably loses its identity, you know, and then the types of bargain, you know, for shareholders might not be too favorable. Because you have to talk about the issue of shares, share capital of the 2 banks being put together and so on. So eventually, they will have to either merge, either, you know, voluntarily or by force, because they have to meet the target. And that was exactly what happened in 2004, when the number of banks reduced from about 84, 86 to 24, 25. So there were lots of mergers and acquisitions and so on. So Professor Uche is a professor of the capital market. He knows the strengths and weaknesses of financial institutions, in the capital market. Not all of them can just go there. There are, the Taiwan banks already that have a lot of financial muscle. Those ones have mobilized funds from within, from their shareholders, and met the requirements. So if the D-Day is coming closer and some banks are not able to, on their own, take the decisions that will enable them meet the target, like, agreeing on mergers or being acquired, then the monetary authority, central bank, will have to come in, encourage them, maybe even coerce them, and ensure that there is fairness in the various deals that are likely to be struck in relation to, mergers and acquisitions.
Prof, thank you.
Yeah.
Professor Uche, please just help us understand, because the tier 1, tier 2, some of us don't get, we want to really understand which of the banks fall within tier 1, which of the banks fall within tier 2, because the policy says nationally designated banks or so are to meet 200 billion,
Yes.
while those internationally licensed are to meet 500 billion. And the deadline is 2026 March
31st, yes.
March 31st,
Yes.
which is how many months from now?
Around the corner.
Yeah, so let's understand which of the banks are tier 1, which of the banks are tier 2, and most importantly, why is the central bank concealing, shielding their names?
Okay, maybe I should start. Let me start from the last question. Why is central bank shielding their names? The banking sector is a highly sensitive sector of the economy. Imagine, Claire, that the central bank comes out today and says that Bank A, B, C have met the requirements. Bank D, E are unviable. They tell you they're unviable, they're unlikely to meet the requirements. Okay, what would be your reaction?
You move your money.
Yes, you want to plan.
Obviously.
Yeah, so that can trigger bank runs. People going to withdraw their money and can destabilize the system. Mind you, one of the reasons for what the central bank is even doing, remember I said it's policy driven, is also to put our banks in a stronger position to even attract foreign capital. Okay, if you check the capital importation reports by the National Bureau of Statistics, most of the banks that pull in money are usually foreign-owned banks, the likes of Stanbic IBTC, Citibank, and so on. So our own banks play a little in that space.
Some of the internationally licensed banks.
Okay, yes, even the international licensed banks. Now the categories the CBN I gave, the CBN didn't say tier 1, tier 2. CBN said those with holding international license, because you find a tier 2 bank, but because that bank is holding international license, is also required to meet up with 500 billion. A good example is Fidelity. Fidelity Bank is also required to meet 500 billion, because it holds international license.
But it's a tier 2 bank.
Yes, it holds international. Now, the tier 1, tier 2 is usually based on capital base. Okay, you have criteria, but majorly the size, capital base. You look at the asset size, the capital base. Okay, there is the acronym we use. In finance balance, we say FOGAS, the FOGAS banks. The FOGAS banks are acronym. The F stands for First Bank. Okay, U stands for UBA. G is for GT. A is for Access, and then Z is for Zenith. The FOGAS. Okay. The FOGAS Bank. So these are the tier 1 banks, if you like. And all the FOGAS banks also hold international, license.
So what does it then mean in terms of meeting up the 200 and 500 billion?
Yes, for them, they are expected to meet the 500 billion minimum. And many of them, from what we have read from, some research firms that track, what has been happening, like, ProShare, if you read ProShare, ProShare tries to track. The cable also has been trying. As I said, it's still in the realm of, it's not from central bank anyway, but these banks will tell you, the likes of Zenith, for example, has met. But, in a conversation like this, on national TV, it may not be proper for us to be mentioning names, but a number of them, have met the recapitalization. Now, the 200 billion is for those with national, license, okay? Likes of WEMA, for example, has national license and so on. And then you also have 50 billion for those with regional license. And even there's also 50 billion for merchant banks and 20 billion for non-interest banks. Okay, non-interest banks that are national in nature. For example, the Jais Bank falls under the 20 billion, and happily too, we hear Jais has also met the capital requirement. Then you also have the non-interest banks that are regional, which is 10 billion. So these are the various categories, and it's important the central bank has steered them that way, unlike what took place in 2004. Remember 2004, it was a blanket. Every bank must hit the 25 billion capital requirement at a time. But today it is tiered.
But even now that there's a tier,
yes,
and the requirements are different.
Yes.
Do you think that this favors smaller banks? Because, from what Professor Abadan has said,
yes,
there are likely going to be mergers, acquisitions,
yes,
and we know the fallout of that, loss of jobs. Reducing the banking space, is it a way forward for us?
Okay, well, there is always, for every government policy, you have winners and losers. You have, the risks. One of the risks that we usually cite anytime you hear recapitalization is a risk of over-concentration. Okay, so you have a situation in which you now have fewer banks, okay, concentration. And these banks now become systemically important banks, or too big to fail. So you now have few banks that are too big to fail. Okay, it's not only even in the capital market, because a number of them are listed, on the exchange. So you also have that, that concentration. That concentration means that if something happens to one of them, okay, it can have a contagion effect and affect the others. And that is why the central bank would now classify them as too big to fail. In other words, when you have that number of banks, few of them, the same central bank will do all within its power to ensure that none of them fails. So too big to fail. Okay, so that is the risk with such. But again, in these days of banking that is even outside, that doesn't involve brick and mortar, in these days of fintech banks and so on, that may not really be an issue. So you can have few banks, and then you have other players that are also in this space, supporting the entire infrastructure. Again, remember too that you don't need to now have a physical presence in a place before you can operate banking services. These days of agency banking, okay. So it's not the number that is important now, but how strong the ones that you have, how strong are they, particularly to play in the international scene. You've had the common saying that the largest bank in Nigeria, if you aggregate all the capital base of our banks, okay, they may not even be equal to one single bank in South Africa, okay, in terms of capital base. So it's important that the central bank is doing what it's doing, to ensure that our banks are stronger. Our banks are also in a better position, particularly those with international license, to play in the international scene and also be in a position to attract.
Let me also ask you. I don't know. I think something like this happened to the microfinance banks. I think the OPAs and all, OPay, the Kuda and all.
Yes, money point.
Yes. Is this likely to cascade down to them again?
I'm sure the central bank, I'm sure, is taking these things in stages. If you also remember, even right now, the central bank is also implementing the capitalization for bureau de change. Bureau de change are also, in fact, their own deadline has expired. They were all expected to. The central bank, came up with tier 1, tier 2 for bureau de change. For tier 1, they were expected to move up to 2 billion. And then for tier 1 to 2 billion, for tier 2 500 billion. So their own for BDCs that has expired. So from time to time, the central bank comes up with a recapitalization just to strengthen the financial system.
Many thanks to Professor Waleke. I'd like to get to Professor Ango. What comes to mind in all of this? Professor Waleke says it's not about the number. The fewer the better, having stronger banks that can compete globally. But I'm thinking about service to Nigerians. Because, when you mention these tier 1 banks and the kind of, you speak to an average, I'm sure we're going to get messages shortly. You speak to an average Nigerian who uses these so-called too big to fail banks. The experiences are not so good. In terms of charges, in terms of, quite a lot, you can't get interest and all of that. Speak to us about what, away from this recapitalization, what the CBN should actually be looking out for at the end of the day, such that these banks are big and actually serving Nigerians, effectively, such that, you're happy to use a bank. And all these charges and all of that are done with, all the failures, just some kind of stability in the banking system so that we can begin to trust, some of these banks.
What the central bank has to do, and I believe what the financial system itself has to do, is that there is need to ensure that corporate governance practices are respected. Risk management aspects of the financial system is also regulated properly. What happened of recent, or at least what is happening in the market, which is a cause for concern, is that sometimes risk management practices are so poor that the banks, tend to lend and just go with whatever is the trend in town, and therefore exposing, or rather putting at risk depositors' funds. Because look at it this way, even with the increase in capital to 500 billion for the tier 1, how much is it in reality? It's just 300 or so million dollars. Compare that to the risk that these banks are actually exposing themselves, and by extension, exposing the whole financial system to, in terms of giving out credits, to certain sectors in trillions of naira. So in reality, that financial stability, that safety of funds is required to be managed in a way that the banks are not having a field day, just lending to any sector that appears, to be doing very well. Since COVID-19, and then with all the attention of banks, going to certain sectors, lending hugely into certain sectors, like, for example, oil sector and the like, we find that banks have lent to sectors that are actually riskier. Sometimes, just because there is no adequate, if you like, corporate governance mechanism or risk management mechanism, to control them. So that aspect of it is what I think central banks should spend more time on. Then also, in addition, and then of course, what is also happening is that these bank executives will go and lend, to certain sectors, maybe one transaction, and maybe sometimes even above their obligor limits. But one transaction alone can expose or put that bank at risk. And some of them, because they have exposure and they have branches all over the world, there's also a tendency to go into transactions that have foreign exchange ramifications. And then by that implicating everybody. And then nothing is done. And then, of course, declaring huge profit. I understand the central bank has done a lot in trying to curtail what profits banks should declare or what quantum they should not declare. But I believe they need to spend more time in looking at the risk management and corporate governance aspects. There's another aspect, which is the consumer, the business, the account holder's interest. What we see all over is all sorts of charges, that are coming on. Before now, many years back, there used to be what they call Commission on Turnover, COT. That was cancelled, but now you see all sorts of charges. And many of those charges are not going to the tax authorities, they're just going to the banks. So they are just sitting down there and making huge amounts of money doing nothing. There is somebody that told me that they charge him for account maintenance, and he was wondering what they have done, or what have they done to maintain that account? Do they need to service it or anything? So all sorts of charges are there. I think for the benefit of the account or the account holders, the central bank also need to come in. Now, there is nothing wrong if the government wants to make money out of this, but then a lot of these charges should be going to service or to provide some services, basic services for people. Everything is expensive. You are being charged for this, for that, all sorts of charges. I think that aspect also needs to be looked at by the Central Bank of Nigeria.
Thank you. I don't know if Professor Remado is still with us. Professor Remado, I hope you'll hear my question very clearly now. I'm just wondering what this whole recapitalization would mean for the manufacturing sector. That's the whole sector that's been crying, about high interest rates and all that. So will this making our banks stronger, will it now ease their burden? Will it make credit even scarce for them? That's one. And do you think that the banks may now opt for short-term loans than long-term loans?
Yeah, I get your question very well. Professor Ango has listed a number of things that the banks, our banks, commercial banks, lend to certain sectors, oil and gas sector in the main. And then, they also lend to governments, and the governors, they do some deals. When this huge federal location comes in, the governors will just go and do some deals with them, keep the money there to generate some interest, rather than do what you call responsible banking. Responsible banking is a banking system whereby bankers have an eye on how the economy of the country goes. Is the economy of the country growing or not? Well, that is not what our bankers are doing. Presently, rather than, do the rebanking or responsible banking, you notice that they involve themselves into so many things, using, so many transactions, using these POS people, several charges, just as we have, Professor Ango rightly pointed that out, just as we have multiple taxes. It is the same Nigerian public, the Nigerian business environment that is suffering this. And now to the manufacturing sector, which is the real sector that caused the GDP to grow, that creates capital formation. They do not pay attention to that. Lending to the real sector. They rather go for short-term lending, however, for liquidity purposes. But there is need for our bankers to be responsible bankers to the economy. Let them lend to the real sector, manufacturing sector, agricultural sector. If you move out of this country, in most cases, when we go on conferences, international conferences, you see that as you are passing on the road of those nations, you see tractors, you see landmass, you see the white man with his tractor on boot and things, happy in the in the farm, large expanse of farm. Agriculture, though agricultural lending is risky, but there's a way to manage it. Shore it up. Banks go down, especially now we're preaching the kind of thing that happened in the 60s. The kind of agri policy that MI operated. These are the things we need the banks to fund and guide them. They don't do anything. They are not serious. They don't apply all. Nigerians are just patient for how to rake in money without paying attention. How many of them are paying attention to the economy, the growth of the economy? That is the problem we are facing. A bank can be small and still be profitable. While looking at the capital adequacy and the profitability and the liquidity profile, that's where you come in as small is beautiful. A mega bank, there are some mega banks that are really wobbling now. I must say, I'm sorry. There's one of them, let me say it here so that they have to sit up. First Bank, I don't understand. You go to First Bank, they will prefer you to go to POS. The branch managers will be having business deals with the POS. They will limit you the amount you withdraw when you have money there. If most Nigerians are very sensitive, it could lead to bank runs. They will say withdraw 20,000, withdraw 10,000, 50,000. How about, I started telling my branch manager, CEO, people are running away from your bank. You see banks like Zenith banks like Access Bank, they are doing fantastically well. These banks should fund the manufacturing sector. Especially now we are watching what this current administration is doing. That is the issue. Some banks will rather be funding, even Yahoo and the other rest. Some of those, easy, quick, overnight.
Professor Ramadou, for your comments, I'd like to get to.
Sorry, Professor
Ango, you want to respond to the manufacturer? Yes. Of course, you'd respond to some of the comments already made by Professor Ramadou. But you see, he tried to make a point about what some of these banks are doing, and I'm thinking that with recapitalization, not stifle competition. In the past, you see banks with all kinds of products trying to get customers, trying to win, people to come borrow and all of that. I remember a time I was using a particular bank and, the minimum was 1,000 naira. Another bank came up and said, well, you can come withdraw everything. You didn't need to, actually have money. But these days, we don't see all of that happening. I mean, all these banks that are now too big to fail just sit and do nothing, like Professor Ramadou said. So respond to his comments and talk about competition in the banking sector, if this would not, make them relax and do nothing.
Okay, thank you. It's just a contribution, not really a response to what he said. Contribution in the area of how can the banks, recapitalized banks, contribute more to the real sector. You look at our GDP numbers today, you find that services sector is the sector that's accounting for much of the growth. The agri sector and manufacturing sector are actually lagging. So industry generally, where you have the manufacturing sector, lags. And how can we now? And this is amidst huge profits being reported by banks. So it does appear that the performance of the banks, is disconnected from the real sector. So how can we bridge this gap? And if you look at it, fundamentally, the financial sector, the banking system is actually meant to mobilize funds. We say their major role is financial intermediation. So mobilize funds from surplus units, those who have, and then channel to those where they are actually needed, the deficit units, That is how you grow an economy. That is their primary function. But it doesn't seem to be happening here. So how can we connect the two? I think the central bank also has a role to play, in all of that. A theory, when we define monetary policy, we say monetary policy has to do with policies that are geared towards, influencing the volume of money in an economy. Okay, it doesn't just stop at volume of money, and also the direction of credit in that economy. That's monetary policy implemented by the Central Bank of Nigeria. But here now, it does seem as if the focus is on the volume of money. Okay, so the other aspect, the direction of credit, should also be looked into. And that direction of credit means that central bank, as one of its policy tools, okay, has this thing they call credit. In the past, we used to have credit allocation, minimum credit that a bank is expected to channel to a particular sector. I think the central bank should reintroduce that to say banks should channel a minimum of so to the agri sector, to the manufacturing sector. The closest we had, okay, during the time of Professor Badan, is this loan to deposit ratio. Okay, 50%, later it was increased 60%. But again, it was not directional. It was just loan to deposit. Okay, so, but the central bank should be intentional in saying the bigger banks now, following recapitalization, should also ensure that credit is channeled to the real sector by using, as I said, limits. Say a minimum of this must be to that sector. And the banks that are compliant should also be encouraged, should be incentivized, okay, using, in my view, something like the cash reserve requirement. Today, cash reserve requirement for banks is 50%. Every bank is expected, once you get the cash, you dump 50% of that, with the central bank. So central bank can give an incentive and say, for those of you to encourage you to lend to the real sector, let's reduce your own cash reserve requirement for banks that are complying. Okay, it's done in other claims. That is called differentiated cash reserve requirement approach. So I've mentioned two things now. One, the central bank can use this credit limits. Yes. The other one is central bank can also incentivize them by using the differentiated cash reserve requirement ratio. Okay, lowering the cash reserve requirement for banks that are actually lending to the real sector. Okay, you see, in Ghana, I was talking about the case of Ghana, but I didn't have the time to finish what I was saying. I said
we'll have to take a break.
Okay.
When we come back, I'm sure. I don't know if we actually answered this question.
Okay, the one on competition.
Yes.
Yes. The truth of the matter is, Irene, the recapitalization will even put banks in a stronger position to compete. But this time they're competing at a different level on the basis of technology, okay, on the basis of infrastructure, because they now have more money to invest in technology. You hear that one particular bank is now using AI, in its operations. So the other banks will now want to compete, along that, along those lines in order to improve their services, to their customers.
Professor Waleke, thank you. All right, let's quickly take a break. Please, when we come back, we'll be reading out your comments. We already have a comment coming from Ajakaye and Simon from Nasarawa. Please keep sending them. We will display the number to send your comments, shortly on the screen. And when we come back, we'll continue our conversation. You're watching Good Morning Nigeria here on the network service. All right, welcome back. Let's quickly take some comments that have come in. Trying to... do you have some?
Yes, I do.
Okay, please go ahead.
All right, I'll take a few. This one says, what is the strategic plan of CBN to ensure that the commercial banks meet the recapitalization target date, considering global financial fluctuation of underdeveloped countries like Nigeria? Another one says, good morning. Please, why is our government through the CBN allowing so much daylight robbery by banks, especially excessive and reckless charges, and the ones highlighted by Professor Remadu? That's coming from Yusuf Abdul from Zaria.
Okay, Simon from Nasarawa is also complaining about the same charges. He says the charges by these banks are too much. This singular act discourages people from engaging conventional and major banks. Nigerians rather patronize online banks. They should do something about this. Ajakaye, this is your comment. I appreciate the moderators bringing the program up. Please, professors, are all these monthly double charges like electronic, SMS, statements, account maintenance, etc., deducted from people's accounts, part of sources for their recapitalization. At times, they deduct these charges twice or 3 times. And then, good morning, please. Why is our government, through the CBN, allowing so much daylight robbery by banks, especially excessive and reckless charges, and the ones highlighted by Professor Remado? Let's start with Professor Obada, and then we'll come to Professor Uchewalike.
Well, thank you.
The charges. Let's talk about the charges, the reckless charges.
No, I do agree with stakeholders on the, enormity and frequency of the charges, some of them illegal, that the commercial banks are heaping on Nigerians. I do experience them myself. And I think it reflects the failure of, adequate supervision of these banks. Because the central bank has, approved list of charges which commercial banks, can met out to customers, stakeholders. But it will seem that in recent years that the commercial banks appear to go beyond such charges that now elicit deep concerns of consumers, depositors, and all that. And so I would say that the central bank should be very sensitive of these numerous concerns and complaints of Nigerians concerning the bad behavior of commercial banks in relation to the charges which they are heaping on Nigerians. And it is the responsibility of the central bank to check whatever abuses that are inherent in such charges. That means that the Banking Supervision Department will have to go into action, do some sporadic book investigation of the books, of some of the commercial banks, to, authenticate these allegations and these concerns, and then ensure compliance to its own regulations in relation to charges, which are not as many as we now witness.
All right, Prof. Professor Uche, in addition, Kashim from Kano says the CBN should intensify efforts to ensure the service delivery is improved in the banking industry. As a regulator, the CBN should also regulate charges by the banks to protect depositors and promote banking. That's from Kashim from Kano.
Yes, Claire, of course, this also is at the heart of confidence in the banking sector. When people are not too happy with the services they are getting, of course, they lose confidence in the banking sector. And it also affects financial inclusion. The central bank is seeking to, get more people involved in the financial system. These kinds of developments discourage people from, having to do with the banks. So is, if you like, is inimical to the efforts to, ramp up financial inclusion.
But why do the
country.
Banks do this, by the way?
Someone
asked
banks,
if it's a means of recapitalization.
No,
because,
no,
why,
absolutely.
Why rip off
not.
customers?
Yes, my advice, Prof has, spoken to it. I share the concerns of Nigerians. My advice to the bank customers is that from time to time, they should be familiar with those approved list of charges, by the central bank. Okay, I look at them from time to time myself, particularly when you're running a business and banks are, you notice these charges. Just pick the approved charges. If you cannot do it, get somebody to help you do monthly, quarterly, reconciliation of your account. By the time you, that's what I'm saying. Yes, no, not there are people that do business. I have an experience. They do business, and by the time they do that reconciliation, they see that banks have charged them so much.
Yes.
And by the time you complain to the bank according to the procedure. The bank, if within 2 weeks you don't get a response, you escalate it to the.
How many people have such energy
well, that's
to go through that?
That's an advice.
Yes,
yes, that's an advice. So, but let's quickly bring in Professor Ango before we take Uremadu. Please, make your responses brief because we're running out of time. Professor Ango, I'm again wondering how this recapitalization may affect inflation. Of course, we know what the value of our naira is. Will this make it even more difficult for the banks to recapitalize? And what does it mean for the ordinary Nigerian who is struggling to buy, his or her daily food?
I do not see much happening in terms of inflation just because of recapitalization, sincerely. Like I said, unlike what happened in 2004, 2005, this time around, most banks will meet it without much stress, because there's so much money available in the market, and the banks themselves, even for the fact that central bank has limited what they can use, what they can use or what funds they can use. Otherwise, they could have used their reserves to just say they have capitalized and they have met the requirement. So I don't see much correlation between that and inflation. But I just will use this opportunity to advise the banks, to look at themselves, and look at the trajectory of the future. The future is not in banking as we see it today. So they are taking advantage of us. They are charging us all sorts. But let them know that the future of banking may not even be brick and mortar as we have it today. So they should take note of that. And then for the Central Bank of Nigeria, let them protect the saver, and then let them redirect, just like Professor Walike said, let there be policies that will make the banks, finance the sectors that we need to grow the economy. And rather than what they do now, if you look at a triangle, what they are doing is they are financing the top, the Dangotes and the refineries and others, and then at the bottom, as a wage earner, you get loans easily because they are charging you so much, and then they are financing those at the top businesses, but all businesses that are in the middle, which are the actual businesses that are employing people, are not being financed. Central Bank need to do something to encourage that deliberately.
To round up the conversation, Professor Abadan, I'd like to hear your thoughts about what you... I'm sure you get to Professor Remadu. I'd like to just hear the response of Professor Abadan as we round off. What you think the regulator should put in place to prevent these banks from engaging in risky practices, after this recapitalization. You already talked about governance issues in the past and all of that. So what should they do just so that once this recapitalization takes effect in 2026, the banks do the needful, or rather do the right thing?
Yeah. Well, thank you very, very much. First, the Central Bank of Nigeria would have to fully enforce its governance rules and regulations relating to board members, relating to management of various commercial banks. Because it's known that in the past, bank owners, directors, and management deliberately put their banks in jeopardy, and after the banks were declared distressed, they ran away from the country. Quite a number of them did that one. So the central bank, as the regulatory authority, must fully ensure that one. And then the supervision department must also do its work well to ensure that the kind of exposures that banks go into in terms of lending, they are supposed to do proper evaluation of loans. But sometimes these evaluations are deliberately watered down to benefit themselves and all that. But if the corporate governance practice is very strong, they will not be able to do that one. Like Professor Waleke rightly argued, I have always been in support of more financing of the real sector of the economy, because that's what grows the economy, employs people, reduces poverty. And then the discriminatory cash requirement scheme you talked about was actually implemented while we were there, such that the cash reserve requirement at that time was not more than 30% or thereabout. But then we still allowed the banks that are willing to lend money to finance real sexual activities to observe much lower cash reserve requirements. So the funds are still available to them.
Okay, Prof, thank you. Let's quickly get the closing remarks from Professor Uremadu. Professor Uremadu, what would your advice be? You raised some concerns. In 60 seconds, what would your advice be to the regulator?
Yes. Before that, I will allow the regulator, let them note very seriously that much of the money in circulation presently are outside the banking system. This money, are with the POS people. They don't pass through the banking system. And in an economy that such happens in the system, how do you account? How do you plan for growth and development? Because you can't account for the money in circulation. Let the central banks check on that. Financial inclusion is very important. They should include the women and go to the rural, area. Support for infrastructural development. Infrastructure of Nigeria should be funded. Roads, bridges, energy. Energy is very, very important. This period of solar. Energy is very, very important because everything, if we don't have energy now, I can't connect with you. The roads, most of you in Abuja now have, knowledge of what goes on in the central bank and this thing.
Professor Uremadu, I'm sorry, I have to stop you here. I allowed 60 seconds, but you exceeded it. But thank you for the points that you have raised. Finally, Professor Uche Uwalike, what happens to those companies that may declassify, or merge? Just 60 seconds.
Companies or banks?
Yes, banks. Sorry.
Yeah, banks. Yes. The options. Either you meet the requirement or you don't meet. If you don't meet, you risk being downgraded. So your license can be downgraded. And then, of course,
the
if you are not...
Yes.
You mean?
Yes. What would be the plight of the customers? What's your advice to the customers?
No,
risk
don't
at
panic. All. No risk. Your banking system is stable. The central bank will not, I don't think, will allow... Even if a bank is going to... go into extinction, so to say. There's also, don't forget there is NDIC is also there.
All right.
To
yes.
Most likely, central bank will force banks that are unwilling to merge or be acquired. They can be acquired. And will force such banks to either be acquired or merged.
Okay.
Such that depositors, investors are all protected.
Many thanks. I would like to appreciate our guests for being with us. We hope at the end of the day we'll not just have stronger banks, but of course stronger economy and richer Nigerians.
Yes.
At the end of the day. Many thanks for joining us for the conversation. Professor Sebastian Uremadu, Professor of Banking and Finance, Michael Okpara, University of Agriculture, Umudike. Many thanks for joining us. We sincerely appreciate your insights. And of course, Professor Yushua Ango, Deputy Vice Chancellor of Academics, Kaduna State University, and Professor of Finance and Entrepreneurship. It was indeed a pleasure to see you again, and many thanks for joining us. Professor Uche Uwalike, President, Association of Capital Market Academics, thank you for sharing your thoughts with us. Thank you. We sincerely appreciate it. And of course, Professor Mike Obadan, Professor of Economics and former DG, National Center for Economic Management and Administration, Ibadan, and former member, Monetary Policy Committee and Board, CBN. Thank you so much, Prof.
Thank you very much.
Time.
It's my great pleasure.
All right. And that's Good Morning Nigeria for today. We thank you for watching. I am Claire Adelabu Abdul Razak. I'll see you tomorrow.
And I'm Yanri John. Live locked on the NTA.